Hey, my name is James Nicholson and welcome to my YouTube channel. In this video, I want to talk about why more borrowers, people like you, people like me, are taking shorter mortgages at the moment. I'm talking about 1 year deals, 2 year deals, rather than 5 year deals. Why is that happening and what could you do? What should you decide to do? We'll discuss the pros and cons of a 1 year deal, 2 year deal and 5 year deal in this video. Now, before we jump into this, as always, if you haven't done already, subscribe to the channel over there and hit that bell notification. I've got new content every single day with property news, house prices, interest rates, how to invest in property, showing you around my projects and more. So do subscribe and hit the bell. And while you're here, smash like, tickle like, do something to that like button, guys. That really helps me with the YouTube algorithm and it gets more views on the channel. So please take a moment to do that now. So, historically, 2 year deals have been better because what mortgage lenders wanted to do was get you doing more transactions. But now, in this market, the 5 year deals are often a better deal. Now, that tells us something. And what it tells us is over that 5 year period of time, banks like HSBC, Santander, NatWest, those types of lenders that you borrow from, they expect interest rates to drop. And because they're expecting interest rates to drop, they want to tie you in on a longer deal and maximize their profits. So what they're doing right now is making the 5 year deals more attractive than the 2 year and the 1 year deals. However, the perception is by a lot of people, including myself, is that interest rates are likely to drop in the short term. And it's not just us saying that. The Bank of England have said that themselves. They've said we're on a downward spiral now with interest rates, but we've still got to see how inflation pans out. We've got to make sure inflation is actually beaten. Now, this month's inflation data was up, wasn't it? But that was expected. The Bank of England was expecting it to go up, but it was actually not as big an increase as people were expecting. A lot of analysts thought that the inflation would go to 2.3%. It went to 2.2%. The Bank of England's belief is that by the end of 2024, inflation will be back at 2.75% before falling off below 2% in 25 and below 1.5%, around 1.5% in 2026. And so with that in mind, the belief is that interest rates will continue to fall. Now, part of this is going to be based off what happens in America because our economies, they're intertwined. So we can't cut rates to zero if the Americans keep their rates at 5% because the pound would crash and that would cause inflation because we import a lot of stuff into this country. So what we will look at is how America is going to do. And America got some good inflation data. Their data inflation reading went down for the 12-month period from 3% to 2.9%, which was good. And all signals are that the Federal Reserve will cut rates in September. So that means that the Bank of England might cut rates in September, probably not. But a lot of people believe that the Bank of England will cut interest rates 2 more times in 2024. Now, that could lead to the banks getting a lower rate themselves. Remember, big banks like HSBC and all those guys, they borrow off bigger banks like JP Morgan Chase. They borrow on an interest rate called the SONIA swap rate. And that actually came down quite a lot when we got the good inflation data a few weeks ago. And it went down when the Americans were predicted to go into recession when we had that stock market crash for a day or so about a week ago. So, because of that, there's a belief that interest rates, mortgage interest rates, will start dropping. And I've done a lot of videos in the last few weeks about a lot of lenders have been really getting competitive on rates and dropping rates. Now, that wasn't necessarily to do with inflation or the Bank of England. It was more to do with the market being slower at the moment. And so because there's not lots of transactions happening, banks are getting creative to get more money to make sure they get a bigger slice of the mortgage market than maybe they have already. And so they're fighting amongst themselves in order to drop interest rates to get business from you and I. Let's look at what the best two deals are that we can see on Money Supermarket for a 2-year deal. So on a 2-year deal at the moment, the best interest rate at the moment is 4.19%, and that's with Barclays. Again, Barclays are the best deal for the 5-year deal. They've been really competitive recently. Barclays and NatWest have been having a big price war. In fact, NatWest quite often has been the cheapest, but then Barclays will replace them. So on a 5-year deal, Barclays at the moment have a deal at 3.83%, which is not bad. And what it shows us is they want to get you on a 5-year deal. And so there's quite a big difference there, particularly if you're a buy-to-let investor and you're just paying interest only. You'd see quite a difference in the monthly payments that might sway you towards that 5-year deal. And that's what lenders are trying to do, to entice you to that. So a lot of people aren't taking that bait at the moment, and they've made the decision, rightly or wrongly. If you do this, you should speak to a broker to look at your financial situation, because they know your income, your expenditure, how much you owe on the property, what value that property might end up at. They know that kind of stuff, right? So always speak to a broker. But a lot of people are taking the shorter deal. So they're paying this higher interest rate here. It's not massively higher, but they're willing to pay that higher interest rate because they believe that over the next year or 2 years, interest rates will be lower. And I tend to agree with that. I think that mortgage interest rates won't be much lower, but I do believe this year, I've said in the video recently, I think that by the end of this year, you'll see some deals at around 3.5%. I don't think massively that you'll get less than that. I think the Bank of England rate will come down to 4.75%. But I think the rate that you can get on a mortgage will be at 3.5%, will be the best possible deal. So it's not massively less than this. But over the next 2 years, I think rates will go down even more. And I think around that time, you might get a 2.95 deal. I don't think you're going to get anything in the ones at any point soon, but I do think that that's a possibility. Now, another thing that people are doing, and they're becoming popular again, is tracker mortgages, because the likelihood is that rates are going to track down. If you're on a tracker mortgage, you can get a tracker mortgage that you could leave with no penalty. So speak to a broker about that. But if you take a tracker mortgage and the rates go down, then your rate will go down the next month. That's the benefit of having that. You've got the risk that if it goes up, it goes up, and that might not be great for you. But you've also got the benefit that if it goes down, immediately, without waiting for a new deal, your monthly payments would be adjusted, which is really, really positive news. So look, that's what's going on in the market at the moment. The draw is the 2-year deals at the moment for a lot of consumers. The banks are trying to entice you to the 5-year deal. You need to speak to a financial expert about what works best for you. If you like security, certainty, then the 5-year deal might be good for you. But if you want to take a little bit of a gamble and pay a little bit more now in the hope that in a year or a year and a half that your rate will be cheaper, then maybe consider the 2-year deal. Let me know in the comments below if you were going to remortgage. Let's say maybe you are going to remortgage right now, or maybe if you were going to remortgage right now, would you take a 2-year deal or a 5-year deal? Do comment below and let me know. Do smash like, guys. That helps me so much with the channel. Subscribe, hit the bell, check out all the other content on my channel, including this video right here.